Yesterday, President Trump addressed last week's stock market turmoil caused by confusion around his tariff agenda.
The global market is holding its breath, tensions are simmering, alliances are shifting, and the economic cards are being reshuffled. At the center of it all is Japan, a quiet giant making a bold move that has sent shockwaves through the U.S. financial system. For decades, Japan has been one of America's largest foreign creditors, holding hundreds of billions of dollars in U.S. Treasury bonds. By doing so, Japan has played a significant role in stabilizing the dollar and financing U.S. debt. But recent financial reports show a staggering development. Tokyo has sold tens of billions of dollars in U.S. Treasury bonds over the last few months. The question is, why? To find the answer, we must look toward the deepening trade tensions between the two economic powerhouses. It all started with U.S. tariffs on imported electric vehicles. President Trump's America First stance meant strong protectionist policies designed to boost American industries. Major automakers like Tesla, General Motors, and Ford benefited from significant government support, while imported EVs, including those from Japan's industry leaders like Toyota, Honda, and Nissan, were hit with hefty tariffs. Now Japan is retaliating, not with words but with its wallet. Pulling back on U.S. bond purchases is Tokyo's way of sending a clear signal. If you continue this protectionism, we'll stop supporting your economy. It's an act of economic defiance, quiet but seismic. And here's the twist. It isn't just about EV tariffs, there's something bigger at play. For years, the global financial system has revolved around the US dollar. Central banks around the world hoard dollars, trade deals are made in dollars, and nations like Japan have bought up US debt as a means of economic cooperation. But now, things are changing. China, Russia, and other nations are already moving away from the dollar, reducing reserves and promoting their own currencies. Japan may be following this trend, seeking to diversify its assets into Asian markets, potentially in a bid to foster closer regional ties with powers like China, South Korea, and ASEAN nations. A new regional financial system could emerge, loosening America's economic dominance one bond sale at a time. So, what does this all mean for the United States? In the short term, if Japan continues to sell off U.S. bonds, the repercussions could ripple through financial markets. The dollar's value may decline, import costs could soar, and inflation may rise. U.S. bond interest rates, already under pressure, would increase, raising borrowing costs for the federal government. In the worst-case scenario, this could trigger instability in global markets, creating a domino effect that no one is prepared for. Washington finds itself between a rock and a hard place. It has two choices: compromise by reducing tariffs to stabilize its economic relationship with Japan, or double down and face mounting financial risks. Neither option is without consequence, and Japan's counter is just one domino in a larger trade narrative. While the U.S. wrestles with fallout from its tariff wars, another key player is signaling its strategic independence: Canada. Once viewed as America's closest ally, Canada is charting new paths in defense and economic partnerships, paths that bypass Washington entirely. Tensions in the U.S.-Canada relationship can be traced back to 2018, when President Trump imposed steep tariffs on Canadian steel and aluminum, causing billions in economic losses for Canada. But rather than bow down, Canada retaliated with its own tariffs on American goods, and now, years later, it's taking things a step further. At the end of 2023, Canada signed a $6 billion defense contract with Australia for long-range radar systems. What's striking about this move isn't just its size, but its intent. The radar systems will enhance Canada's ability to surveil vast and vulnerable Arctic regions, areas of increasing strategic importance due to climate change and rising global tensions. By choosing Australian-made systems, Canada is sending a message. It no longer wishes to rely solely on the United States for its defense infrastructure, and it doesn't stop there. In recent months, Canada has also signed a series of trade and defense agreements with the European Union and Southeast Asian nations, totaling $7 billion. Together, these agreements represent a calculated effort to diversify Canada's global partnerships and reduce its dependency on an increasingly unpredictable United States. The Arctic, the planet's final frontier, stands at the heart of these shifts. As melting ice opens up new shipping routes and untapped resources, the region is quickly becoming a geopolitical flashpoint. Canada's strategy is clear. It's strengthening defense capabilities, seeking new allies, and positioning itself as a key player in the Arctic, regardless of Washington's plans. These moves carry major implications for North America's future. What happens when longtime allies go their separate ways, pursuing new strategies and partnerships? And will the United States respond by trying to repair ties or doubling down on its own America First agenda? Meanwhile, tensions aren't just flaring abroad, they're boiling over at home. The US-EU trade war has taken a champagne-soaked turn, with President Trump threatening to impose 200% tariffs on European wine, champagne, and spirits. For European wine producers, these proposed tariffs could be catastrophic. In 2023 alone, the EU exported over $13 billion worth of alcoholic beverages to the United States, making America a critical market for premium brands like French champagne and Italian wine. For these producers, a 200% tariff could mean lights out. Yet this isn't just a story of economic pain abroad, it's a story of opportunity at home. As European imports become prohibitively expensive for American consumers, U.S. wine producers, particularly in California and Texas, stand to benefit from the gap. Trump's tariff threat could turn into a boon for the domestic wine industry, giving American vineyards the chance to expand and compete on a global scale. But at what cost? Critics argue that escalating trade wars hurt more than they help. Higher prices, strained alliances, and diminished trust between trading partners make for an uncertain future. If the EU retaliates further, the spiraling conflict could deal yet another blow to an already volatile global economy. From Tokyo's bond sell-offs to Canada's Arctic strategy to wine tariffs that ripple through the transatlantic economy, one truth remains clear. We are living in an era of economic uncertainty, where every decision carries immense weight. The question now is, how will these stories unfold? Will Japan's move to reduce its reliance on the dollar signal a dramatic shift in global finance? Can the US and Canada repair a strained relationship before diverging too far to reconcile? And will America's trade wars leave lasting scars on industries and alliances alike? The world is watching, stay tuned.